maximum policy uncertainty.
I wonder if Donald Trump sees this as maximum uncertainty. When he was in the interview over the weekend with Fox, he talked about how actually he's being very clear about his goals, and that his goals have been laid out in terms of how he wants to rearrange the U.S. economy. My question is, does he recognize the sort of in and out tariff strategy that he has and what the consequences could be on business? Or is this a feature, not a bug? And is he saying, you know, this is part of what's going to happen in order to rearrange some of the structure?
Well, we're not at peak uncertainty yet because we haven't even have the entire menu when it comes to tariffs. We're going to get that on April 2nd. We also have 25% on aluminum steel coming into play tomorrow. And guess what? Retaliatory measures already coming from Canada when it comes to Ontario and what they're putting on electricity coming into the United States. This story, this is just the beginning. It is not the end.
Equity futures this morning just about positive. We are back by just 0.25% on the S&P 500. Coming up later on in the program, Brian Levitt of Invesco following the worst day for the Nasdaq 100 since 2022. Rob Casey of Signum Global Advisors ahead of Trump's meeting with bank CEOs, and Alistair Pinder of HSBC after downgrading U.S. equities. We begin this hour with stocks looking to recover after growth fears drove the S&P 500 closer to correction territory. Brian Levitt of Invesco writing, tariffs are likely to lead to a more volatile investment environment rather than result in a bear market for equities. I would not expect a broad decline in risk assets or a recession in the economy. Brian joins us now for more. Brian, good morning. Good to see you.
Nice to see you too.
Where does that more optimistic view come from? What underpins that?
So what underpins it is ultimately a belief that we will start to see a move towards greater clarity, but that gets called into question the longer that this persists. So my view in writing it was ultimately the administration will provide greater clarity around this. Look, tariffs result in less optimal outcomes, but as long as we know the rules of the game, businesses will get through it. And of the belief that, you know, the Federal Reserve, given the recent inversion in the yield curve, will start to sound a more dovish. Right. So I think most investors don't think that way. So you don't necessarily need the cathartic moment. I don't think we're there yet. I think there's more to go in terms of a bottoming process. But even if you're investing and you're halfway through a correction, historically, that's been quite good for investors.
More to go. What needs to happen for that cathartic moment? And then, frankly, for a steady climb upward, what kind of information do people need to see?
Well, we need clarity. I think Jonathan said the exact right word, which is we need policy clarity. And I go back to 2018, thinking about what was going on then when we were dealing with the U.S.-China trade war. So what ultimately led to a bottoming in the market? The United States and China got together and said, okay, 90-day truce. Well, that doesn't fully eliminate uncertainty, but 90-day truce. Federal Reserve came forward and said, all right, we're done raising rates. We may even be lowering rates in 2019. And that type of policy clarity is how you start to move forward. So long as we're in this environment where consumers don't know the rules, businesses don't know the rules, you're going to be challenged for a while.
Right now, the bulls on the street are basically coming out and telling us it doesn't really matter if we have ongoing policy uncertainty. On the fiscal side, as long as the Fed comes out and rescues markets, as long as they cut rates by enough, then you end up with a rally and a supported market. Do you agree?
Well, it can't hurt, but I think you're going to need it beyond just the Federal Reserve this time. You can't be making the cuts that you're making on the fiscal side and creating the uncertainty you have on the trade side. I think that the Federal Reserve alone just bringing rates to new most Americans have fixed rate mortgages anyway. Most Americans didn't recognize the move up in rates. They're not necessarily going to feel it on the move down either. So you're going to need more than that. You're going to need trade and fiscal policy get to a place where we understand where it's going.
When it comes to trade, though, that uncertainty is why Donald Trump thinks he can have this negotiating power. How long do you think the market could sustain this uncertain period? Because it could be months.
Well, it could be months. I mean, we can, I don't know. So the word sustain, I mean, we can fall further from here, right? I mean, we're used to 5-10% corrections. They happen every year. Greater than 10 are less frequent, but they're almost always the result of policy uncertainty. And so the market could continue to feel pressure from it until you finally understand what the rules were going to be.
Do you sense there's a pain threshold within this Trump 2.0?
We certainly hope so.
Right.
You know, I mean, the idea of the Trump put is being called into question right now. But ultimately, I don't think this is an administration that wants to see the markets moving the way they are. Now, they may have an ideology around trade that they want to pursue, and they're not going to move away from it. But let's get with it. Let's figure out what the tariff rates are going to be, and let's move on.
It's 2018. They tolerated much more than this, didn't they?
Yeah, 2018 we were down 20%.
Is that what you're looking for now?
It seems like you're moving towards that. I mean, right now the S&P's down 8.5%. I mean, we were down 8% when the Bank of Japan raised interest rates once last year. So this seems a little bit more challenged of an environment than that. Again, I come back to the fact, though, if you're an investor and you invest halfway through a downturn, you should be okay. So let's not try and get too cute with this, but it doesn't feel like the bottom is in yet.
Consumer discretionary is down 20% from the recent highs, led by Tesla, of course, but the airlines have started to participate, down to this morning, down by something like 11%. What do you do with consumer-exposed names? When you hear Ed Bastian, the Doubter CEO, say things like mid-February, consumer, business, purchases, activity just started to stall. He says it's going to be transitory. Do you think it's going to be transitory?
I do think it'll be transitory because this was an economy that came in with fundamental strength. The consumer, where household net worth is at all-time highs, where the unemployment rate was near all-time lows. So it's a consumer that's coming into this in good shape. It's a consumer that's not over-levered. It's an economy that's not over-levered. We were in a good backdrop. The consumer right now is tightening their belt a little bit because they don't know. You know, if they work for the federal government, you're not sure what your employment picture is going to look like. If you're in the market, you're not entirely sure what your household net worth is going. So you tighten your belt a little bit, but it doesn't feel like a recessionary environment. Now, could you get there with a prolonged period of uncertainty? Sure, but when you look at the usual indicators on a path to a recession, big leverage, big excess, corporate bond spreads blowing out, none of that exists today. And until corporate spreads really start blowing out, I'm not ready to think of this as a much more meaningful downturn, severe recession. It's just not what the picture is telling us right now.
Initially, a lot of Wall Street firms agreed with you, but the downgrades have started to pour in. We've seen it from HSBC, we've seen it from Goldman Sachs and JP Morgan, Citigroup coming out, downgrading the U.S. Equities to neutral and upgrading Chinese equities. Yeah. At what point would you agree with them and say that actually, at the very least, to quote Citigroup, U.S. exceptionalism is at least on pause?
Well, we're upgrading European equities as well. I mean, we've increased our exposure to European equities earlier this year, and why? It's not complicated. Leading indicators in Europe were climbing, period where valuations were more heightened. So you're getting these cyclical bounces. I always say these markets, everyone's waiting for things to be good in Europe. No, markets move on better or worse. By the time investment that you're seeing, the borrowing that you're likely to see out of Germany is this more structural. They have a chance. Now, can we get 27 countries to agree on it? We'll find out. But there is certainly a chance. And yeah, I mean, sometimes it's real simple. If you're easing policy, it's a better backdrop. If you're pursuing tighter policies, it's a worse backdrop. And it behooves investors to think about those parts of the world that are being more stimulative right now.
Citi making the point that the better news will come from elsewhere over the next several months. It won't come from here.
What's interesting is that Citigroup thinks that better news is going to come from China, whereas HSBC thinks that better news is going to come from Europe. It's sort of like pick your poison. Where in the world you think that it could potentially have better information?
On that call, that downgrade to US equities, HSBC joining us a little bit later this hour, so look out for that. Small business confidence came in about 12 minutes ago, and small business confidence came in lower, 4-month low. There is a nugget in here, though, that got my attention, and I think it got least us too. The share of owners who said it would be a good time to expand decline by the most since April 2020, and a gauge of capital spending plans matched an almost 5-year low. That is not what we want to see coming into 2025. Brad, thank you. It's good to see you as always, sir. Brian Levitt there. Go with an update on stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. First, I wanted to give you some of the details on that Citi downgrade you mentioned. So it did downgrade its view, as you said, on U.S. equities to neutral from overweight. At the same time, they upgraded China to overweight. They cited valuations, government support for the tech sector, specifically, and more generally, tech breakthrough. Similarly, cut U.S. stocks yesterday while upgrading Europe. Volkswagen shares surged after it reported a strong result and encouraging guidance, up 3.3%. The German automaker expects to maintain profitability this year despite muted demand in Europe and rising trade tensions. Volkswagen is also under pressure to stabilize its performance in China, where local manufacturers like BYD are taking market share. Now to the downside, Delta shares plunging in the pre-market trade, down 10.6%. If it sticks, it would be its worst day since 2022. It cut its profit expectations for the first quarter roughly by half on weakening travel demand. Delta's CEO blamed a drop in consumer confidence for the decline, but believes that the impact will be temporary. And that's your brief, John.
Danny, thank you. That stock down double digits in the pre-market. One to watch going into the opening bell. Up next on the program, losing hope for the Trump put.
The strike price on the Trump put is lower than we thought. Maybe the uncertainty is hurting to some extent, but also there's something beyond just trade that's driving markets, and I think it's sort of a deterioration in the data.
Rob Casey of Signum Global Advisors joins us next, live from New York City this morning. Good morning.
had a great career. Suppose the President of the United States said, I need a new chairman of the Federal Reserve Board. Your response would be?
I think I say talk to David Rubenstein. I don't think so.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Check out shares of Delta down 11% in the pre-market. The guidance was a safety events. They acknowledge that. They also say this is going to be transitory. But as we work our way through the rest of the year, at least we'll get a rebound.
We'll find out, of course, as the weeks go and policies start to get decided upon. They basically said that this is mostly a domestic issue and that uncertainty was creating a real paralysis when it came to travel, but their full year forecast stayed the same. We'll see. There is a sort of expiration date on how long paralysis can continue before there are potential consequences.
The first big company out of the gate on the S&P 500 to really slash expectations. Equity futures elsewhere bouncing back by 0.4%. Ugly session yesterday. We're up by 0.5 on the Nasdaq 100. Out of surveillance this morning, losing hope for the Trump put.
The Powell put, the strike price on that is lower than we thought, and we learned more about that last week.
The latest this morning, President Trump meeting with top CEOs and Wall Street bank executives today as markets face uncertainty and recession fears. Bloomberg's Tyler Kendall joins us from the nation's capital for more.
Remarkable shift in market sentiment in only 50 days. We have to remember that it is only how long President Trump has been in office. And just yesterday, a statement hit our inboxes right after the markets closed, with a White House official appearing to blame this on emotions instead of fundamentals, writing, quote, "We want to emphasize that we're seeing a strong divergence between animal spirits of the stock market and what we're actually seeing unfold from businesses. We've been pushed towards by officials recent examples of investment under this new administration, such as last week, for example, TSMC pointing out $100 billion in new investment as, sort of evidence that these plans that the White House is starting to put into will have longer term impacts. But at the same time, the question becomes, will the White House make any assurances of any kinds as we tried to seek more? Had the chance to catch up with NEC Director Kevin Hassett at the White House yesterday, who told me that until President Trump's full policy plans are implemented, there's actually only so much they can do to counter what this White House has been pushing as structural issues left behind by the Biden administration. But John, how long that argument can go on for remains to be seen, and we could get some answers later on today. 5 p.m. Eastern is when President Trump is set to address the business roundtable. We're still chasing exactly who will be in that room, but no doubt they're going to want some firmer guidance.
Tyler Kendall of Bloomberg. Looking forward to your coverage later on this afternoon. You know the chief guy. Biden date. Yeah. Right. So what's Biden date?
Biden mess. We need to come up with policies to
I think
fix
it's a stretch to suggest that the small business confidence read this morning is Biden data.
Which raises this question of how seriously is President Trump going to take it when he meets with this business roundtable later today.
Rob Casey of Signum Global Advisors with us around the table. Rob, good morning. Good morning. It's good to see you. Chuck Robbins leads that business roundtable of Cisco. Reportedly, we could be expecting JP Morgan's Jamie Dimon, Citi's Jane Fraser a little bit later on. What do you think the message is going to be to those guys?
Well, I think the message is going to be have a little patience, have a little faith, right? And maybe look
in terms of trade policy. He said he wanted to Are we seeing anything of a surgical approach when it comes to what they're doing right now on tariffs?
No, I think so far. Honestly, I think so. We don't think we're going to see universal tariffs. I think that's baked in. We also, frankly, don't think that on April 2nd we're going to see a snapback of 25% on Mexico and Canada. I haven't seen in the sort of, I think, very Scott Bessent preferred, very targeted approach that maybe we could have.
When it comes to the market sell-off, is that enough to push the administration to hold back on the 25% we're expected tomorrow on aluminum and steel?
On aluminum and steel, no, we don't think so. Frankly, that is a domestic industry that President Trump really wants to protect. It's a domestic industry that has asked for these tariffs. So unlike autos, et cetera, that have been pushing back on the threat of tariffs, aluminum and steel want to be protected, right? U.S. aluminum and steel want these tariffs on threats that Trump has made. He either hasn't followed through on or he's reversed the next day in the case of Canada and Mexico.
Maybe so, but that hasn't given a boost to markets that are still grappling with a great deal of uncertainty. And we haven't even seen the bazooka, the big one that's coming on April 2nd. Some people have suggested that maybe it's the polls, and that right now polls are hanging in there. That frankly, Donald Trump's support is a little bit lower than where it was at the beginning of the presidency, but it's still significantly above where it was the last time around. So do you agree with that idea?
Yeah, I agree with it, but not in the sense that Trump was looking at polls day to day, right? He's never going to run again. A couple of clients every once in a while will push back on the idea that maybe he will run again in 3.5 years. I would not expect that. But I think the mechanism is please allow me to run on something positive, right? And we haven't seen that so far.
Well, he lashed out last night at one congressman saying, I'm going to primary you if you don't sign up for my continuing resolution that's going to hit the House floor today. Does it pass?
We think it passes the House or potentially could pass the House. We don't think it passes the Senate, frankly. I mean, Democrats have to take a stand somewhere. This is really the only place that they can take a stand, right? When it comes to reconciliation, they can't do anything to stop it. But when it comes to this CR, as much as Speaker Johnson wants
government,
I think so, honestly, and we're hearing Democrats go back and forth. But yeah, I mean, listen, this is not a clean CR, right? And so I think Democrats will try and message that. We haven't seen much messaging from Democrats over the course of the past 50 days at all. But that's assuming that Republicans in the House can get this over the line. And frankly, it's not only Massey who is a no as of now, right? We've heard that Trump has made calls over the course of the past 24 hours to get Kat Cammack and others over the line. They have obviously, I mean, we've said it every day, they have a very slim majority in the House, maybe a little bit wider because some Democrats are staying home. But it's going to be really tight.
Rob, good to see you. As always, thank you, sir. Rob Casey there of Signum Global Advisors. If you want to join us, third of 1% on the S&P. Yesterday, the biggest one-day loss on the S&P 500 of the year so far. On the Nasdaq 100, the biggest one-day loss going back to 2022. There have been some downgrades out there, including this one. In just a moment, we'll catch up with Alistair Pinder of HSBC. After downgrading US equities in the last 24 hours to neutral and upgrading the rest of the world, we need to talk about Europe with HSBC in just a moment. Live from New York City this morning. Good morning to you all. This is Bloomberg TV.
is no backwards in recycling. There is no backwards in treating pollutants in your water. The trends at times of what you talk in the press may be different from one crisis to the next. My job is to go beyond crisis, to anticipate. That's why innovation. We knew we could do recycling of plastics for years. Nobody was really interested in that, and suddenly it takes off. But we found the solution in the meantime. So in a way, my job as a chief exec is to deal with the short term and to be able to deliver essential services results now is a way to afford the future and to afford to innovate and to see the long term as well.
To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Let's put that into market capitalization or perspective. Since February 19th, the NASDAQ is down $4.2 trillion worth
have been hammered. They're down 20% from the highs of December. The banks, the KBW Bank Index, wiping out the gains from the post-election rally.
Since February 18, how much? This is looking at exactly what the NFIB survey pointed to, which is stasis when it comes to investment and when it comes to deal making.
The only good news I've got for you from the last 24 hours is bonds did what bonds should do, and they rallied, particularly at the front end of the curve. Yields dropped by double digits, down by about 11 basis points on a 2-year this morning, up by 2. The 2-year at the moment in the FX market. The euro at about 108.88 and positive by 0.5%, getting closer and closer to 109. On our radar this morning, Delta Airlines falling in pre-market trading after the company delivered a disappointing forecast. Delta cutting its profit expectations for the first quarter roughly by half on weakening travel demand. That stock down 11%.
The problem here is the pace of the decline. The fact that in January, Ed Bastian, the CEO of Delta, came out and said that demand is about as strong as it's ever been, and that, frankly, the demand-supply picture is very balanced and very good. All of a sudden, people aren't traveling anymore, and it was mid-February, and he said that this is a U.S. domestic issue. He does expect it to subside. But the speed of this is what's going to get people's concern. And the reason why soft data right now might be more important to people than backward-looking hard data that tracks the economy that might have looked very different, say, a month ago.
You can make up a lot of excuses for this. You can say that seasonally the first quarter for the airlines is not good. I think there's some obvious things to point to that could stick around. If you're a federal worker right now, I wouldn't be booking a vacation. I'd probably be cancelling my vacations. And a whole load of people around those people, these things can unravel and bleed out through the rest of the economy pretty quickly.
It's not only the threat of potentially losing your job. If you have lack of conviction, how do you go out and pitch business? How do you go out and try to make deals? These are some of the things that we have seen trickle into the soft data. Delta's still seeing the same full-year forecast. At what point does that materially shift the trajectory versus just being a short-term uncertainty blip?
And let's see if the other airlines follow. We'll be looking out for them throughout the next couple of days. That's for sure. Let's turn to this story. Canada slapping a 25% surcharge on electricity it provides to Minnesota, Michigan and New York in retaliation for President Donald Trump's tariffs. The move coming ahead of fresh U.S. tariffs on steel and aluminum set to take effect tomorrow.
This is really the first blow of the whole tariff agenda. These retaliation in terms of energy Ontario provides to a number of states in the U.S. Donald Trump late last night came out and said, we don't need your cars, we don't need your lumber, we don't need your energy, and very soon you will find that out. Well, I think a lot of businesses, and even anecdotally, I spoke to a to the United States States. This is going to get tough. And Doug Ford yesterday spoke to Kayleigh and Joe on Bloomberg TV and was saying Trump has created this chaos, and he says this has unleashed patriotism in Canada they have not seen.
At least talked about this a few times over the past week. For that to start happening, it's very difficult to forecast this. Dollar weaker, not stronger. The euro is stronger again this morning, 108.83. We're up by 0.4%. I want to talk about the latest out of Germany. Germany's Greens saying they are ready to negotiate a defence spending deal and are hoping for an agreement this week. This coming after the party rejected a debt finance package that would unleash hundreds of billions of euros in spending. I want to stick with Europe. The EU looking to boost investment and prepare for expected tariffs from President Donald Trump. Bloomberg's Ollie Krug joined us from Germany, in the heart of German business. Ollie, walk us through what you're hearing from the
question of tariffs. I mean, this is a sort of front and center for here. Wolfsburg, Germany. This is one of the biggest manufacturing sites in the world, probably the biggest factory in Germany. This is where Volkswagen really made all of its cars historically. This is, got huge assembly lines and absolutely massive in terms of generating output of cars. And this is sort of in the sort of center of the discussion here because Volkswagen has had to face the reality of a sort of much tighter squeeze in China. They've had to have a much slower situation here in Europe. They've had to cut down assembly lines. This used to put out 4 lines. They're moving this to 2. What they've had to focus on is their growth market, and that is the United States, right? And that is what is coming into complete sort of disarray now. I spoke to the CFO a little bit earlier. Nobody really wants to give you a sort of scenario of what 25% tariffs looks like. They all say wait and see, but have a listen to what Arno Antlitz, the Chief Financial Officer of Volkswagen, had said to me earlier.
We feel already like an American company. Look, we operate a huge factory in Chattanooga with thousands of people there. Volkswagen Group of America employs more than 20,000 plus people, great, safe, and well-paid jobs. We invest in South Carolina. So we think these should be taken into account when talking about tariffs and Volkswagen and talking about the U.S.
So you can hear it there from the executives, the kind of the pitch to Donald Trump of why they should be sort of exempt from tariffs. But it's not just about tariffs between Europe and the United States. A huge part of the Volkswagen strategy has been establishing a battery factory in Canada, establishing the VW Gulf factory over in Mexico. All of these things are being caught up. And listen, I spoke to a number of executives over the last 24 hours, really pressing them on what tariffs would mean. Nobody wants to give you a whole lot. But what I can tell you is that this is a market, the United States market, that they want to double their market share. It is the only major market that grew last quarter, and they will hold on to it to the bitter end. So if that means augmenting capacity in the United States, I suspect they're ready to do it.
Those plans have been totally upended in many ways over the last month or so. Ollie, I appreciate the breakdown. Bloomberg's Ollie Krug there, the latest from VW, and some of the automakers and some of the challenges they face right now. These are some of the challenges that investors face too. And what are they doing? They're fleeing into European markets and downgrading US equities. Alistair Pinder of HSBC writing, prior to the US elections, we assumed a Trump victory would reinforce US exceptionalism. We are in that call. Start of the year, you think what a lot of people are thinking, US exceptionalism. What changed?
So what did we underestimate? We underestimated the potential for governments to discount to US markets. And we're now seeing the stars kind of align. And you mentioned the euro, it's 108, but for the majority of the year, it has been depreciating. It's still below excited into going to other markets internationally. You have to see investment opportunities. opportunities. And I think, the two biggest conviction calls that we have at the moment has been China and has been Europe, and both of them have been driven by their own catalyst. In China, it has been fiscal policy and DeepSeek, and that's been driving the internet sector. In Europe, it has basically been the shift in mindset of governments, which is going to basically unleash fiscal spending and support, economic growth. And I think that, for me, is what's going to drive people into Europe.
Typical tariffs, and all of a sudden people start thinking about what the financial repercussions are for places like Europe, and suddenly the fairy tales are over, and you're dealing with fights in different legislative bodies over what kind of spending you could have. How big of a risk is that?
So let's put some numbers into context here. So 25% of European equity markets revenue comes from the US. That's a lot. But actually, a lot of that is not exposed to tariffs at all. So, services, like software and services, don't get tariffed. And actually, there's a lot of companies that produce in the US and sell in the US. That's avoidant of tariffs. So actually, net, what do we think is, exposed to tariffs? Less than 10% of revenue. So much less than what people, I think, assume. And it's very specific in certain sectors. It's the consumer staples, some consumer discretionary, and also the auto. Of course. But outside of that, I think in the industrials, I think in the tech, I think in the financial, I think they can be much more resilient to the tariff risks than people believe it.
So right now, would you advise avoiding those tariff vulnerable sectors?
Yeah, I think that's, that would be our policy, is 100%. Be more sheltered into areas which are resilient to tariffs. And, that's, again, on a global basis. I think that's a theme that we see in the US, where, again, we would be more cautious on the consumer discretionary consumer staples sector, where they import a lot. It's negligible. It doesn't make a difference. So, again, I actually think China, despite all the tariff headlines, is actually more of a defensive play from an international context.
Do you think there's a point at which the administration steps in? So-called Trump that has been talked about a lot. Do you think there is a pain threshold for not just the Trump administration, but also for the Federal Reserve as well? And in your mind, I imagine we're not close right now, but how much closer are we?
I mean, I don't think we're at that point, but I do think we're getting to the point where, if you look at what markets are pricing, we talk a lot about these recession risks. I think we're pricing in a lot of recession risk at this point. We have a, probability of what equity markets implying that's jumped up 10-15% over the last week alone. If you look at the typical equity market performance during recessions, it's around 10 to 15% downside. We're pretty much there. For me, I feel like we're pricing in a lot of downside. Can it go lower? Yes. But at that point, you're going to see bond yields start moving lower. You can see that Fed put come in. And so, again, I think you're completely right. I mean, going to your point earlier, we do have this risk event on the 2nd of April. But beyond that, I actually think the outlook is much more favourable.
Just out of interest, do you think that view about the growth scare in equities is being confirmed by fixed income? We saw high yield spreads blow out just a little bit yesterday. Do you think it's being confirmed by what you're seeing in high yield?
I mean, I think it's being confirmed by what we're seeing in...
So that view on a high yield's one to watch. Yes, spreads have started to widen out, but if you look at absolute levels of around 300 basis points, people might sit here and say that's still pretty tight.
Yeah, some people might also be curious to get CPI tomorrow. A question of, if it comes in hotter than expected and inflationary pressures are still there, how much does that force the Fed's hand and actually raise the bar that much higher for them to really provide that relief valve on the other side with potential cuts?
What's worse than an economic slowdown? An economic slowdown the Federal Reserve can't respond to.
That's the
bearish, just kind of...
Okay, well, I mean, the market yesterday was pretty... Okay, what do you want to do?
Take a shower. Equity futures on the S&P. That's what I want to do. It's not a suggestion. We're up by a third of 1% on the S&P. Let's get you an...
It's free bag policy. Customers will be charged for their first and second check bags unless they hold top tier loyalty status or are traveling on a business fare. Its sales and profit forecast for the current quarter also fell short of analyst estimates. Oracle did report a surge in bookings, though, and said its cloud infrastructure business will boost revenue over the next 2 fiscal years. Elon Musk has blamed what he calls a massive cyber attack for widespread disruptions